Sydney property prices continue to climb, rising by a staggering 6.3% in the last quarter. And the auction market remains strong, with clearance rates topping 90% in most areas of Sydney. Hi, I'm Standen, and welcome back to the Standen Report. A recent report from the ANZ Bank predicts Sydney house prices will rise to as much as 19% this year, with most segments of the market showing strong growth. This is certainly in stark contrast to predictions in the middle of last year of significant falls. Record low interest rates of just 0.1% means in many cases it's becoming incredibly cheaper to buy than it is to rent, with more first home buyers and first-time investors in the market now than we have seen in the last 5 to 10 years. NAB CEO Ross McEwen says about 16% of NAB's new lending is going to first home buyers, which is about double the numbers they have seen of late. That fear of missing out means many are getting into the market now to avoid being priced out later. Investors too are seeing good capital growth and rental returns when compared to other investments such as shares. Michael Yardney of propertyupdate.com.au says investors are recognising that whatever purchases they make today will look like a bargain in 12 months' time. Despite climbing house prices, the Reserve Bank is not hinting at an interest rate rise in the short term, but may start curbing mortgage lending at some point to cool the market. The consensus is that when you have a larger pool of buyers at a time of less stock, and therefore more competition, you should be patient first and foremost. It's also important you will be willing to remain flexible when it comes to the type of property you're looking for. You might have your heart set on a particular home in a certain area, but maybe you'll give yourself a better chance by considering something similar in the next couple of suburbs along. We are joined now by Dennis Wu, Client Relations and Business Development Manager at Standen. Dennis, what trends are we seeing in the rental markets this month?
Thanks, Tavis. While house values are holding their own, rents have dropped over the year across several parts of Sydney, with the largest declines experienced in the City and South Sydney areas, where rental values fell by 4.1% in the first quarter of 2021. According to SQM Research, Sydney's median weekly rental price as of April was $885 for all houses and $692 for all units. And this is slightly down when compared to the same time last year. Vacancy rates sit at around 3.4%, up from 2.9% this time in 2020. With the vacancy rates elevated, it's worthwhile speaking with your property manager to discuss and ensure that tenants are secured and retained during the lease period and further. Thanks, Tavis.
Thanks for the property management update, Dennis. So, whether you're buying or selling or looking to lease out your property, expert advice from those in the know is your best bet when it comes to making an informed property decision. To stay up to date with the latest property trends in Sydney, make sure you subscribe to the Standen YouTube channel by clicking the subscribe button below. I'm Standen, and thanks again for joining us for the latest Standen Report.